Good afternoon, everyone. This is Bob Iacino along with Mike Arnold from Path Trading Partners. This is a weekend Path Chat covering the FX markets for the week of Monday, May 15th. It is Sunday, May 14th as I record this. Quiet week, honestly, economically. Just a fast review of the overall economic data. We had decent Eurozone data. We had slowing Chinese data. And we had a mix in the U.S. data that we've been seeing lately. We had strong consumer confidence numbers, for example, but lower consumer spending on the retail sales side, which includes Amazon, so we can't just say it's bricks and mortar retail. And we also had decent jobs numbers. We had a good non-farm payrolls number, and we had good jobless claims numbers and continuing claims numbers again. So the jobs side continues to move to the positive, but it has not bore out in U.S. consumer spending yet. In terms of this week's economic calendar, I'll go over that in a second, but continuing with a quick roundup review of last week, oil, first weekly gain in a month. We're starting to see some pretty strong commentary from analysts about the OPEC cuts being extended, possibly even added to. So that's giving oil a little bit of a boost. Don't know how long it's going to last. It's my contention, if you listen to our podcast or anything else that we do, that OPEC is kind of just trying to keep oil in a sweet spot that doesn't just explode the shale production any more than it has been. 17 weeks in a row now of rig counts with this past Friday's rig rise. So 17 weeks in a row of rising Baker Hughes oil rig counts. The pace of rig count additions is the steepest in 30 years. So the production isn't exploding, but we're above 9.3 million barrels. That isn't in the numbers yet, but it will be this week. U.S. is above 9.3 million barrels a day now. Markets did not really freak out over the Comey firing at all. We did have over the weekend a North Korean, what was initially called a projectile, that was then, I don't know if confirmed is the right word, but then most of the news outlets were confirming that it was a ballistic missile. So that could actually spike the VIX. The VIX ended up on its lows again, even after a quick spike from the Comey firing. The VIX ended up with its lowest close in 24 years during the week, ended May 12th. 10-year yields, if I'm rounding it, 2.33%, closer to about 2.36% on the close. German Bund rates, still 39 basis points, or 0.39%, whichever way you want to look at it. In the last month, the German Bund has risen 20 basis points on the yield side. The U.S. 10-year has only risen 9 basis points. So you've got an 11 basis point tightening of the 10-year Bund spread. I think at this point, people thought that the U.S. 10-year would be a lot higher. We still have not exceeded our 52-week high on the 10-year of 2.63%. I'm going to quickly cover the earnings scorecard. I know this is an FX Path Chat, but I want to put all the fundamental data in here. As of Friday, with 91% of the companies in the S&P 500 reporting actual results for the first quarter of 2017, 75% have beat the mean EPS estimate, and 64% of all S&P 500 companies have beat their mean sales estimate. The blended earnings growth rate for the S&P 500 is 13.6%. If that ends up being the actual growth rate for the quarter, it'll mark the highest year-over-year earnings growth for the index since the third quarter of 2011, which was much higher. It was 16.7%. Earnings revision, the estimated earnings growth rate for the first quarter of 2017 was 9%. 9 sectors have higher growth rates today compared to March 31st due to upward revisions to earnings estimates and upside earnings surprises. And that's been led by the industrial sector. In terms of guidance, for the second quarter of 2017, 61 S&P 500 companies have issued negative EPS guidance and 29% have issued positive EPS guidance. In terms of valuation, the forward 12-month PE ratio for the S&P 500 now stands at 17.5%. This is above the 5-year average of 15.2% and the 10-year average of 14%. So when you hear people saying that Stock market is expensive in the U.S.? Probably is. Let's look at the economic calendar for the week. Tonight, 9 p.m. Central, 10 Eastern Time, we've got some numbers out of China. We've got Chinese retail sales year over year for April and retail sales year to date for April. Two different things. Year over year is expected at 10.8%, and the year to date is expected at 10.2%. We've also got industrial production and the year to date industrial production growth out of China, both for April. Year over year expected at 7%, last was 7.6%, and the year to date is expected at 6.9%, last was 6.8%. Market's going to be looking at this because of the talk that's sort of continuing, or rather being spread, of China's slowing. Anything you see negative now in terms of asset valuations or currency pair comparisons is talking about weak growth in China. So Chinese data is going to matter for the coming weeks, especially as earnings starts to taper off. For Monday, 1 a.m. Central Time. All the times I'm going to give you is Central. I'm in Chicago. It's one of the first nice days we've had in a long time on the weekend. So if you hear birds chirping or dogs barking, I've got the windows open and I'm keeping them open. So if that background noise bothers you, many apologies. Japanese machine tool orders year over year, 1 a.m. Central Time. That's for April. There's no estimate yet. This is a preliminary number. Then at 8 a.m., Canadian existing home sales month over month. Last was up 1.1%. And then we've got 9 a.m., U.S. Housing Market Index, the NAHB Housing Market Index for May, expected to be unchanged at 68. Get to 8:30 Central Time. That's 8:30 p.m. We've got the Royal Bank of Australia's May rate meeting minutes. And then the Japan Tertiary Index will be coming out at 11:30 p.m. Central Time, expected to be up 0.1%. That is a month-over-month number for March, so it's not going to be very market moving unless it shocks. The last was up 0.2%. I don't expect any industrial or sales numbers out of Japan to shock anytime soon. Tuesday, May 16th, 3 a.m. Central Time, Italian gross domestic product, quarter over quarter and year over year. Quarter over quarter expected to be up 0.2%, but the more important year over year number is expected to be up 0.8%. Last was unchanged on the month over month and up 1% on the year over year. Half an hour later, 3:30 a.m., we've got UK Consumer Price Index month over month and year over year. Again, year over year being more important, expected at up 2.6% versus up 2.3 last, and the month over month expected at up 0.4 versus 0.4 last. And we've also got the Core Consumer Price Index for the UK, same time, only releasing a year over year number, expected to be up 2.3% versus 1.8 last. Those year over year numbers, the CPI and the core CPI, are the ones that will matter. German ZEW coming out a half an hour later, 4 a.m., along with the Eurozone gross domestic product. So the German ZEW survey will have a current situation and an economic sentiment. The current situation expected at 82% versus 80.1 last, and the economic sentiment, the more important one, expected at 22 versus 19.5 last. There's also a Eurozone ZEW survey of economic sentiment. No estimate on that. And then the Eurozone gross domestic product, again, this is all released at the same time. The year over year, the more important one, expected out at 1.7%. The quarter over quarter expected to be 0.5%. Both of those numbers are listed as unchanged. Get to 7:30 Central, 8:30 Eastern, U.S. housing starts, U.S. building permits. Housing starts expected to be up 3.7% versus down 6.8% last. And building permits for April expected up 0.2% versus up 3.6% last. Again, first housing numbers, significant housing numbers for the new quarter. Those, again, going to matter. I keep referring back to this. We're trying to see if the Fed was right about the first quarter weakness being transitory, being temporary. Then 45 minutes later, U.S. industrial production, that's 8:15 Central Time, expected to be up 0.4% versus 0.5. U.S. dollar manufacturing production expected to be up 0.3 versus down 0.4. You get to about 6:50 Eastern Time PM. Japan's machine orders for March, 1.2%. Then you've got the Australian dollar wage cost index. That'll be at 8:30 p.m. Central Time. Expected to be up 1.9%. And you've got the Westpac consumer confidence an hour before that, but there's no estimate on that yet. It's also Australia, obviously. Wednesday, May 17th. In the UK, 3:30 a.m., average weekly earnings. 3-month year-over-year for March, and average weekly earnings ex bonus. Average weekly earnings supposed to be up 2.4% versus 2.3 last, and ex bonus expected to be 2.1% versus 2.2 last. And you've also got the ILO unemployment rate and employment change. The unemployment rate is supposed to be unchanged at 4.7%, and the employment change is supposed to be up 21,000 versus 39,000 last. Half an hour later, 4 a.m. Central Time, Eurozone Consumer Price Index, month over month and year over year. These are final figures for April. And then the core year over year, also a final figure for April. The important ones first, the 2 year over year numbers, expected to finish at 1.9% versus 1.5 last, and the core 1.2% versus 1.2 last. Eurozone Consumer Price Index, month over month, expected to be up 0.4. 9:30 Central Time, we're going to have the EIA crude oil inventories, as always. Got to talk about that because crude oil and the dollar have that inverse correlation. Later on in the evening, 6:50 p.m., Japanese gross domestic product annualized and the quarter over quarter, both at the same time, as well as the nominal GDP quarter over quarter. So let's start with the annualized, expected to be 1.8% versus 1.2 last. This number will matter to the dollar yen. And then the quarter over quarter is supposed to be 0.4 versus 0.3, and the nominal GDP quarter over quarter 0.1 versus 0.4. 8:30 p.m. Central Time, Australian employment change, unemployment rate, and full-time employment change. The employment rate is supposed to be 5.9%. That'll be unchanged. And the employment change is supposed to be up 5,000 versus up 60.9 thousand last. Full-time employment change, no estimate on that one yet. Thursday, May 18th. Slower day, although we do have Draghi speaking later in the day. Starting at 3:30 a.m., UK retail sales year over year, and retail sales including auto fuel year over year. So their retail sales headline number is their ex-energy, which is different than the U.S. But the retail sales year over year, which includes fuel, expected to be up 2.6%. That would be unchanged. These are April figures. And including fuel year over year, expected to be up 2.2% for April. Then you've got U.S. jobless claims expected at 240,000 and continuing claims expected at 1.95 million. And the interesting thing is last 236,000 and last on the continuing claims 1.981 million. Both initial claims and continuing claims have been better than expected the last 2 weeks. Then we've got the Philly Fed. That's all coming out at the same time, 7:30 Central Time. Philly Fed expected 18.5 versus 22 last. And U.S. leading indicators for April expected to be 0.4 versus 0.4. Again, we're almost at the end of May. So on the trading floor, we used to call those the misleading indicators because they were just so late in the process. We're almost at the end of May, and we're getting the April figures already. We've got a lot of April data to talk about already. And then at noon, ECB's Draghi speaking in Tel Aviv. Draghi spoke to the Dutch this past week, and really was very terse. We'll see if his attitude has gotten a little bit more. He's usually pretty cool and diplomatic, and he was very terse speaking to the Dutch. In fairness, they were giving him some pretty tough questions. Friday, May 19th. Go all the way through the overnight with nothing really significant until we get to 7:30 Central Time, where we get Canadian retail sales month over month, Canadian Consumer Price Index month over month, and the Consumer Price Index year over year. The year over year, the important one, expected to be 1.7% versus 1.6 last on the increase side. Month over month supposed to be 0.5% of an increase versus 0.2 last, and the retail sales expected up 0.3 versus down 0.6 last. Then we've got Eurozone consumer confidence for May at 9 Central Time. Interesting timing on that. Expected to be down 3 points versus down 3.6 last. And then again, Baker Hughes rig counts at noon. We are at 885 rigs now. I would expect that to be up small again. It wouldn't surprise me if it was down a rig or two, but I do expect it to be up. There's no estimate on that, but I'm giving you an estimate of up 6 oil rigs. That's it for the calendar and the weekly recap. Let me turn it over to Mike to let you know what he's seeing on the charts. Mike, it's all yours.
Okay, thank you, Bob. So, Friday triggered a short-term trend line trade long in the euro US dollar, which is what we're looking at right now. The first target of this would be this defining point, which comes in at 109.97, and the second target would be the end of the clear path that comes in at 110.19. So you can watch for those key levels on this longer term trend line trade, which would probably take more than a couple days to play out. Meanwhile, short-term levels to watch for. On a continued rally of the euro US dollar on Monday, 109.65 first key level, second key level 109.94 area, which is pretty much in the defining point 109.97 area. So if we get a pullback, key support 109.08, followed by around 108.93, and then the 108.78 significant level. And if we pull back to below the rotation zone, we're looking at another key support about 108.64. Over to the pound US dollar. Pound US dollar is traded down into the rotation zone, finding some support right around this 21 exponential moving average. So key levels to watch for. If it goes down Sunday night, Monday morning, 128.52 to 128.44 is going to be key, then followed by 128.33. Then if we break all that, we are looking for a potential fall to 127.84, which is the end of this clear path. On a rally back up, resistance, we got a hooking 8. So we have resistance also at 12.5 Gann level, 129.11. Then if we get above that, watch for the 129.48 level, then followed by the new upper trend line defining point about 129.88 to 129.89 level. US dollar, Japanese yen pulled back to a rising trend line and the 8 EMA. So that's going to be a first level of support should we go down on Monday, 113.23. If we break below that, end of a clear path and 25% Gann level and longer term 62.5 area right in here, we're looking about 112.73 to 112.81 is going to be very key support. And if that's broken, you can watch for the area of 112.39 to about 112.21 for next level support. Rally back up. Resistance 113.59 to 113.66. Then above that 114 level. Then above that about 114.30. US dollar, Swiss franc, pretty big down move on Friday. If it continues lower on Monday, fair amount of support coming in around the 99.97 to 99.92. And then you can watch for Friday's lows around 99.87. If that's broken, the next key areas are 99.82 to 99.79 area. And then if that's violated, 99.60 is going to be key. Rally back up. Lots of resistance between 100.34 to 100.39. Then above that, looking to test around the 100.56. Then the 100.69 to 71 area. Finally, if that's violated, 100.81 to the highs on Friday, 100.85. Over to Aussie US dollar. Aussie US dollar rallied into the rotation zone, then sold off, just ending above this Gann cluster we have right around the 73.81 level. On a rally on Monday, 73.94 first area of resistance, 74.13 to 74.20 is going to be your next key area. Then if that's violated, watch for about 74.34, and then coming in at the upper end of the rotation zone around 74.49. If we head lower, going to watch for some minor support right around 74.20. Then we can see this move down to end of the clear path 74.47. Then we have a lot of support down at the 73.37 to 73.29 area. US dollar, Canadian dollar, still caught in this range. Very strong resistance right around this 137.32 area. If that's violated, you're looking to possibly get to about the 137.51. And then above that, we're looking at about 137.80. And once we get through that, 137.93 to 134. On a pullback, we have some support right around the 136.77. Then we could drop to the 136.51. Then we'd be looking at the 136.24, bottom of the rising rotation zone. Finally, over to the US dollar, Mexican peso. Almost reached down to the end of a clear path on Friday. So if we head back down on Monday, watch for the 1872.51 level for support. And if that's broken, we have a defining point for the rising trend line at 1867.25 and then 1866.47. If we go down below that, watch for 1864.34. And then if that's violated, a big drop could be in store to 1855.97. Rally back up. First key level of resistance is going to come in at about 1890.24, followed by a retest of the hooking 8 and rising trend line about 1893.15. Then if that's violated, watch for potential rally to 1897.99. And on a very strong rally, significant level and declining trend line and flat 50 all coming in at 1902.77. That's all we have for you. Back to you, Bob.
Thank you, Michael, and thanks to you guys for watching. If you like what we're doing, hit subscribe and hit the like button, and we will talk to you guys in the next Path Chat. Cheers, everyone.